Well, good morning. Yes, it's me, Kenny Polcari, your host of the party. And it's been a couple of days since we did a video because I was traveling last week. I was in New York. I was unable to do it. In any event, today is Monday, December 4th, 2023. And here are the things that you need to know to get your day started and kind of figure out what the heck went on last week. Well, JJ on Friday came out and he said, don't go betting the ranch. So what do traders do? They bet the ranch, taking stocks to new highs. The NERI index supports double-digit growth in 2024. Gold makes a new high overnight, and oil continues to come under pressure. Bitcoin, something we haven't spoken about, pierces $41,000 this morning, and many are now suggesting that $100,000 is the next stop in 2024. The VIX continues to move lower. Consider some insurance. And it is Christmas time, and so we are the Feast of the Seven Fishes. And tonight, I'm going to give you recipe number 2, the Filet of Sole. Okay, so look. JJ comes out swinging, telling us that the Fed is not on the path of cutting rates. But he did say that the Fed policy is, hold on, here it comes, well into restrictive territory. And that caused the algos and traders to go wild. They went all in, taking stocks to almost new highs. The Dow rising 295 points or 0.8. The S&P up 27 points or 0.6, leaving it just 14 points away from making that new 2023 high. The Nasdaq rose 79 points or 0.5%. The Russell gained 53 points or a whopping 3%, while the Dow Transports raced ahead, adding 445 points or 3% as well. Apparently, the idea that we are well into restrictive territory must mean that we're at the high end of the range and we can't possibly go any higher, and the only thing we can do is cut rates. I mean, isn't that clear? 5% Fed fund rates? It's ludicrous. It's unheard of. Who could possibly think that 5% federal funds rate is okay? I don't know. And then Bloomberg tries to justify that move by telling us that JJ's new phrase, well into restrictive territory, is code for a rate cut, or at least something more dovish. And at this point, anything that sounds dovish means the fix is in, and stocks surge. Now, mind you, his comments were also laced with caution, reminding us that nothing is carved in stone. And until we hear from ត្ថৃ from the Wall Street Journal and Goldman Sachs, both mouthpieces for the Fed, it still isn't completely clear what the next move is. I think we hold, but plenty of others think we don't. But as you can see, the bulls seem to be in control, and that's forcing all the bears who set themselves up for a fall, think going short, to have to run for cover. And when the bears have to run for cover, that means that the short interest becomes buy interest, and bam, there it is. Stocks go higher. And they did. And before we forget, earnings season, which just ended, is about to begin again in just 6 weeks, right? But let's think about what just happened and ask ourselves, is the earnings recession over? Third quarter net income was up 4.1% year over year. This after we had 3 straight quarters of declines. Earnings per share for the S&P were up 7.1% when you add back in the buybacks. And like so many of tell us, it's not so much about the earnings, because those are history. It's about what the C-suite has to say about the future. And the majority of them did not disappoint in their conversation, right? And Ed Yardeni, right, his NERI index, which is the Net Earnings Revision Index, measures trends in analyst forecasts. And while downward revisions are increasing ever so slightly, consensus for 2024 year-over-year growth in revenues and earnings remains solidly positive. S&P consensus earnings for 2024 are now $245 a share across the S&P companies, right? That's an 11% jump from 2023's 221. That implies what? A significant reacceleration in profits, which to me suggests an ongoing robust economy, which then begs the question, why does the Fed need to cut rates? Cutting rates is stimulative. Does it feel like we need to be stimulated? So, who were the Friday beneficiaries? Real estate, right? That was up 2.1%. Industrials up 1.6%. Consumer discretionary up 1.4%. Again, right? That speaks to the consumer. Utilities up 1.2%. Basic materials up 1.2%. Financials up 0.7%. Energy was up 0.5%. Healthcare was up 0.4%. Tech and communications both up just 0.2%. Further down the line, home builders up 3%. Retail up 3.8%. The value trade was up 0.9, right? SPYV up 0.9. The growth trade, SPYG, was up 0.4. Metals and miners, the XME was up 2.8%. AMR, one of my favorites, up another 5%. Cybersecurity was up 1.2%. Robotics and artificial intelligence, the BOTZ ETF was up 2.3%. And Kathy Woods' disruptive tech ETF, ARKK, tacked on 5%. Aerospace and defense, right? The ITA up 1.2%. Bonds rallied, sending yields lower. The TLT, which is the 20-year bond ETF, was up 1.6%. The TLH up 1%. The 30-year bond yield lost 10 basis points to end the day at 4.38. The 10-year yield plummeted by 13 basis points to end at 4.19. The 2-year yield lost 14 basis points to end the day at 4.53. The 3 and 6 month bills are yielding 5.19 and 5.14 respectively. And again, I ask, when bond yields were rising, everyone begged the Fed to stand pat because the bond market was doing the work for the Fed. So if that's true, then when yields are falling, why are these same people begging the Fed to cut rates? Isn't the bond market doing the work for the Fed? Mortgage rates should surely start to retreat, even if just a bit. The current 30-year conventional rates on Friday were 7.68%, down from 7.8 last week. 15-year rates were 6.82, down from 7. Right? The 5-1 arm came in at 6.79. That's down from 7.98. This assuming, of course, you have a 740 plus FICO score. Friday's economic data was mixed. The S&P U.S. manufacturing PMI came in at 49.4. The ISM manufacturing PMI coming in at 46.7, both in contraction territory. Yet the ISM new orders remains in an uptrend, coming in at 48.3. That's up from 45.4 last month. Today is going to bring us factory orders expected of negative 3% versus last month's of plus 2.8. That's nearly a 6% swing in that data point. Durable goods expected to be down 5.4. Tomorrow brings us the JOLTS report, right? And that's expected to show a decline, which will support the idea of a weaker labor market and then a rate cut. While Wednesday brings us the ADP employment report expected of 120,000 new jobs, and Friday brings us the monthly non-farm payroll report, right? And that's expected to show an increase of 180,000 new jobs. Unemployment is expected to remain at 3.9%, but there are some that are betting we're going to get a 4% handle on the unemployment number. U.S. futures this morning were lower. Dow futures down 50, S&P's down 10, the NASDAQ down 50, while the Russell went from negative to up 6. Treasury prices are a bit lower. Yields are up about 5 basis points. Gold has been all over the place, and the dollar is up small. Bitcoin, something we haven't spoken about in a long time, pierced 41,000, and all of the experts now are out there again calling for it to pierce 100,000 in 2024. So far, it is up more than 150% year to date, so certainly not a bad mover. European markets are mixed. Germany and Spain in slightly positive territory, while the rest of the Eurozone is off about 3 to 4/10%. Eurozone manufacturing continues to weaken in November, coming in at 44.2 last month. That is now the 17th consecutive month of declines for that index. Remember, traders in Europe are also betting that the ECB is about to reverse course and move rates lower rather than hold steady or go higher, although Christine Lagarde has also been very clear, just like JJ, saying it's not in the plan, at least not yet. And the oil story continues to get uglier, putting pressure on prices and on the Saudis and on OPEC+. This, after they were unable to kill the negative story about swelling oil supplies, right? Think non-OPEC production, as they try to cut production amongst the members. Now, the non-OPEC producers are now producing at record levels. Output here at home is now more than 13 million barrels per day. This even more than under the Trump administration. And I'm sure that Bernie must be rolling over in his grave. Oh, wait, he's still here, right? It was Kissinger and Munger and Rosalind Carter and Senator Dan O'Connor who passed away last week. I'm sorry, my bad. Anyway, so a couple of thoughts here. 76.25 was the trend line, support trend line for oil, and we failed to hold it, which means that, as I told you last week, that we could possibly test a November low of 73, and guess what? We did. Overnight, we tested as low as 72.86 before rallying back to 73.50, but do not expect the Crown Prince to sit idly by. Oh, no. Falling oil prices is not what the kingdom ordered. Gold rocketed higher on Friday, rising $40 to end the day at $2,090. Joining in the celebration as gold traders also now assume that JJ is done, and that rates must be about to fall. The dollar index moved lower as well, and this morning it's trading at 103.30. That's down from 103.41 last week. I told you last week that gold wanted to test the May 2023 high of 21.34. And guess what? Overnight we tested that. We pierced right up and through it to trade as high as 21.51 before backing off. Now at 6 o'clock this morning, gold was actually negative. Came all the way back down, trading at 2,086, down $4. And this as the VIX continues to trade lower, getting more and more complacent with each passing day, as if stocks will never go down again. And you know what that means. Get ready. Again, I think the VIXY, the VIXY, is a cheap and simple insurance policy to help hedge your long stock positions in the event that we hit a pothole. You can also consider buying the inverse ETFs that represent the different indexes that get you short those indexes, right? The dog is the industrials that trades at about $31. It's down 6% in the year. The S&P trades at $14. That's down about 15% in the year. And the PSQ, which is the gets you short the NASDAQ, trades at $10. That's down 32% in the year, which makes sense since the NASDAQ is up 32%. And if you're really, really negative, then you could buy the SPSX, which is the Recession 3 times levered inverse S&P ETF. It's levered 3 times. That's the key point here. Remember though, none of these strategies are long-term. They are very strategic and need to be employed very carefully. So understand what you're doing. The S&P closed at 45.94 after kissing 45.99, rising 27 points on the day. I told you that it felt like the S&P wanted to test the 2023 high at 46.08, and for all intents and purposes, we did. This morning it feels just a bit weaker, not a sell-off by any stretch, but at some point there has to be some consolidation. Stocks are overbought, bond yields are oversold. Do not be surprised if you see this rebalance, if they let it rebalance, because it kind of feels like they're not going to let it rebalance. Now, remember, we've been talking about how the market is priced for perfection, the soft landing, the double-digit earnings growth in 2024, and the rate cut sooner, like March, rather than later. So you ask yourself, what could possibly go wrong? Oh boy, where do we get started? Anyway, if you're invested, you're good, right? Because you're participating, you're having a great time. If you have more money to put to work, that's great. Be patient, don't chase. Be a little bit more passive, stay on the bid side. Let them come to you. And if you're just starting out, go slow. Understand your risk profile. Know where you are in the life cycle. Call me to discuss, because I'm always happy to discuss setting up the portfolios. Okay. So what do we have for dinner? Well, it is Christmas again, and I'm giving you the recipes for Christmas Eve on the Feast of the Seven Fishes. Here's recipe number 2, the Filet of Sole. Now, this is a simple dish to make, and it's a personal favorite. I make this all year long because it's so delicious. And for this, you need the Filet of Sole. I usually make 3 or 4 pounds of it, so we make a lot. You need eggs, you need Italian-style seasoned breadcrumbs, you need flour, olive oil, and of course, you need tartar sauce. Now, you're going to beat, 4 or 5 eggs, depending on how much you're making, in a large bowl, so you're going to make like an egg wash. Then you're going to put some flour on a separate plate, and you're going to take your Italian seasoned breadcrumbs and put those on a separate plate. Now make the production line, right? First the flour, then the eggs, then the breadcrumbs. Now, take the Filet of Sole. You've cut them kind of into nice pieces, right? Not these big pieces. Cut them into pieces. Dredge them in the flour, shake off the excess flour, put them in the egg wash, toss them around a little bit, take them out of the egg wash and put them right on top of the breadcrumbs, using the fork, the back of a fork, to make sure that you cover the piece of fish in the breadcrumbs. Flip it over, press it down, make sure it's all nice and covered. Take the fish, put it on a clean plate, and just repeat that until you've breaded all the fish. Now, turn on your oven to broil. Put some olive oil in the pan, maybe like 1/8 of an inch in the pan. Heat the oil under the broiler. Now, be careful and watch. As your oil gets hot, you're going to need to make sure that it's ready to broil the fillets. Take a pinch of breadcrumbs and toss it in the pan. Do they sizzle right away? Because if it sizzles, then it's ready. Now, if so, take the pan out, take the fillets, put the fillet down in the oil, then flip it over. So you flip it over, right? Fill the pan with the fillets. Now put it under the broiler and let them turn golden brown. Open the door, take a spatula and flip the fillets over so the other side gets golden brown. Once it's browned, remove and place it in a serving platter. Serve this with the tartar sauce. And listen, any leftovers makes for a great fish fillet sandwich the next day, whether you do it on Christmas Day or the day after Christmas. But you got to make sure if you have leftovers and make extra so that you have it. You're going to heat up the filet. You're going to take a nice piece of toasted Italian bread, melt some provolone on it, put the tartar sauce on it, put the fish fillet on it, put the other piece of bread on top, slice it, at a diagonal. It is delicious. It is a great day after Christmas sandwich. You can't help it. And if you make enough, you'll certainly have extras and you'll be able to try it. In any event, look, I'm on my way to Sarasota this morning. I'm speaking at the Money Show today and tomorrow. So there will not be another video until Wednesday. So until then, take good care.